We see very healthy used businesses, but we see a lot of unhealthy new car businesses. You go up from selling on average, 12 days to 70 days. And your gross on new is about half. Machines can do things with precision that we can't, and there's huge margin in the precision.
A big thank you to our sponsors for making today's episode possible. Cars Commerce, Witham, and Lotlinx. And now let's get into the show.
Len Short on the CDG podcast. Len, welcome.
Yoshi, thanks for having me. I'm a big fan.
Well, I had a little cheat sheet in the company over here. I think this person's related to you, so I learned a little bit about your background, or a little bit more than is probably publicly available here. We'll go into some of the topics. I think one of the things I wanted to kick off with is I heard you used to sell Porsches. Is this true?
I did. I was, I took a year off trying to figure out, what I was going to do with my life, and met a guy who owned a bunch of stores named Tom Cavanaugh. And what was funny about it is the family had been horse traders before they were car dealers. They actually traded horses, and then the Model A came along or whatever, Model T came along, and they got into the car business, And so they were a long time, smart operators. I think Quirk, up here in the Northeast, bought their stores. So now I'm part of the Quirk thing. Anyway, I came across this guy and said, you got to come work for me. And, I heard Porsche, and I thought, well, I can sell, And the first month, I didn't sell a single car. I was the worst. I'm taking up, smoking cigarettes, drinking coffee, trying to figure it out. Second month, I figured it out. Third month, I was number one salesman, And anyway, I had a lot of great life experiences doing that. You learn, you never know who's going to buy. I had a guy walk in with a beat up truck and overalls who paid cash for a brand new 911 Target, and, long story about him, but, and I wasn't up. The first guy was up, was like, you take it. Next guy said, no, you take it. And I took it, so you never know who's going to buy. But yeah, so I've walked a lot. I've done lot rodeos. The son would, he was the general manager. He'd come in every morning and he'd literally go out to the front lot and he'd look up and down the road and he'd sniff the air. And then he'd come back in with a strategy for the day. Okay, well, we're going to move all the used cars around, and then we do this lot rodeo. I mean, it was like this active manager guy who would divine what was going to happen today and what he had to do to sell more cars, and then we would be all on it, And I thought it was a good discipline, actually.
So what took you from the car business to, I call it, the tech industry, which you'll tell us about in a second, then brought you back to the automotive tech industry? Give us a little spark notes of your transition through your career.
Yeah, I've always been a car guy, so I bought more cars than the average person. I figured I knew something about buying cars. But yeah, I went into the advertising business, and, as some of the big advertisers are automakers. So I spent some time in Detroit working on, the Chrysler business, in Detroit, and learned a lot about it from the OEM side of things. And one of the things I learned that I still apply today is back then, we would run, they'd introduce a new model. We do fancy advertising, put an 800 number in the ads, and people would call for a brochure, which we would, rush to them. But we would find that by the time the brochure got there, they were already driving their car. When people get down to, putting in a lead, they're in that strike zone, and it's like a 72-hour window, and everything changes, And so we've actually applied that philosophy here, just sort of trying to understand when people move from just generally clicking around and looking at cars and so on, to when they get into that strike zone where they're ready to make a purchase and connect with a piece of inventory. It's a big part of what we focused on here. So I learned that, but I did a lot of things in the ad business, primarily telephones, credit cards. I ended up moving to the client side. But some headhunter called me in my office in New York, and was blathering on about something, and all I heard was San Francisco, and I always wanted to get to San Francisco, so I went out and interviewed with this little company. Several years later, they came back after me with Schwab, and so I went to be the chief marketing officer of Schwab, and they had about 700,000 active accounts, and a few years later, I left them with 8 million active accounts. So the way I got back to the car business is I was writing angel checks in San Francisco. I had left Schwab, done well. And so I had done a nonprofit startup called Product Red, which, is red branded products that you could, gave money to the Global Fund for ARV drugs for Africans. And so everybody at the dog patch in San Francisco thought I was pretty cool. I was like the old guy who, was hanging with Bono, and they thought I was cool. And, so I was just writing angel checks, and I came across some guys who I've recently found out are all billionaires now because they did one of the big cloud plays. And they were technologists, really brilliant technologists who raced Porsches on the weekends up in Sonoma. And they had built all of this indexing technology to find used Porsches, like, used SCs that were posted, and it was very disorganized back then. So they'd be posted online. So they did all the scraping to aggregate them. And then they built a bunch of tools to understand the value. So they sort of price mileage and whatever they were looking for a commercial application for it. So I ended up going deep on that. And that was really the beginning of what is now Lotlinx.
Yeah. So take us to 2011, which I believe is the year you founded Lotlinx, right? Just give us a quick summary. Like, what was the state of the market, right? What was the value prop? And I can imagine the company's evolved a ton till today. It's been a while. The car business has changed somewhat. To a certain extent, it hasn't changed as well. But what was the state of the market? Like, what was the problem you identified to found Lotlinx?
Yeah. So what we understood was high consideration vertical categories weren't dominated by Google. They were dominated by vertical sites like Travelocity or Auto Trader and so on. Yeah. So dealers were, basically pushing all their inventory up to third-party portals and letting all the online shopping happen there. And our pitch was, hey, you've got to get that shopping and engage the customer on your inventory on your site and your VDP. And, their only question was, what was the VDP? They didn't really know. They just weren't thinking that way. They just, and so we went to work, sort of showing them the value of delivering that low funnel customer directly to their inventory. And, that when you do that, when you connect somebody at that strike moment, on inventory, it has a big influence on where they purchase, so it had an immediate impact. And, and so of course that was a long time ago, but the industry has changed a lot since then. And we've, of course, built a lot of technology since then.
Yeah. How did you talk to me a little bit about how you got this company off the ground? I think we have many listeners who are aspiring auto tech entrepreneurs, many vendors tuning in, of course, many dealers. But what was it for you, right? Getting company out like this off the ground from just business model, but also funding, right? What was that experience like for you?
Yeah, I was in San Francisco, and so I knew a lot of the VCs from what I was doing in just angel investing. And so I was running, I was taking the classical route, which was we had put together a deck and sort of a basic demo of what we wanted to do. And I was running up and down Sand Hill Road trying to get VCs, to do a seed investment. And at the time, no VC wanted, they were all interested in anything that had to do with destroying the car dealer. Like, hey, the car dealer's going away and it's all going to be online. And they were throwing money at all of those things, which, by the way, now 15 years later, are all roadkill. None of those things, succeeded. And our pitch was, well, no, the dealer's not going away. But, technology is going to enable a dealer, to, expand their footprint, and increase their efficiencies and so on. And it was a tough sell because they only wanted to hear, hey, the dealer's dead. And online is going to, destroy everything and or disintermediate everything.
I'll tell you a funny story. I mean, when I was raising capital for Get a Car in 2018, I was consistently getting the question of like, will Uber, put dealers out of business? If as a dealer, it was something that was so bizarre to me that the people actually thought that. I always believed ride sharing would grow and expand. I mean, it makes total sense. It's an amazing technology and just service in the market. But I I resonate because I've been in those conversations. But tell me what gave you the conviction, right? You are a technologist, right? You've been in some of the most impressive tech companies. I mean, you were at AOL. I saw your background in some of the, peak years. What gave you the conviction to think like, hey, dealers are not going away, as someone who's so forward looking and progressive?
It really was Schwab, because as I said, we dominated online trading. But the reason we did was that we had branches everywhere. Now, people may wander into a branch once in a while. We didn't really do that much. It was maybe early on in the relationship. But the reason we ended up dominating was that people they needed a physical presence. They needed to know where their money was. And I guess I always believed that the dealers played a absolutely crucial role that wasn't going away. It may evolve and change, but it wasn't going away in terms of what the customer needed for that purchase. And, I believe that. And I think I was right? I don't think dealers, all this stuff has happened and it's made dealers, it's changed the business, but it's made, frankly, the dealership business stronger. It's hard to keep up with, it's added cost, but there's no indication that the dealers are going away.
This episode is brought to you by Cars Commerce, the platform to simplify everything about buying and selling cars, including the quote-unquote follow-up. Let me explain. Dealers, fast and effective follow-up is crucial for converting leads into customers. But here's the problem. 40% of shoppers report that they are not getting timely or helpful responses from dealerships. This is a huge problem because your own team could be leaving 4 out of every 10 sales opportunities on the table. Cars Commerce makes it simple to measure and improve your follow-up performance. A Cars.com experience report tracks the percentage of leads your team is responding to and how customers rate those responses. While Dealer Inspire's retailing technology enables your team to quickly text follow-ups with personalized financing options to make the most out of every opportunity. To learn more about how you can measure and improve your team's follow-up performance, go to carscommerce.inc/experience or click the link in the show notes below. So let's fast forward now 13 years, and I want to get into, the specific problems you're solving today as well. The market has changed, right? The dealership environment adopted over the last decade. I mean, you can go through many, many different things: digital retail, CDPs, customer data platforms. I mean, today, of course, AI is scaling quickly. In many, there's many different potential use cases. Lots of dealers have exited in the last couple of years, right? It's been a combination of high valuations, future uncertainty. Certain automakers have come out and made proclamations such as, we're going to go direct to consumer. Certain automakers have then backtracked on that. At this point, where we stand today, do you think that the dealers are here to stay long term? Will they evolve? How will they evolve? What's your take?
Yeah, I think what I find about dealers is there's no more resilient, set of business people that I've ever come across. And I've been in some tough businesses, right? So dealers get everything thrown at them and they figure out a way of adapting and surviving. And, so I think you got to actually take that into consideration. They figure out how to power on. A lot of stuff was thrown at them with the internet. It was a struggle, they spent a lot of money and maybe wasted a lot of money trying to keep up, but they figured it out, and it's, I do think that technology is more and more, data and technology is the thing that's going to separate the winners from the losers. And so, there's been continuing pressure on dealers to figure it out and adopt the right technology. You can't go to market like you did and expect to succeed. And what I find when I go out, I spend a lot of time with owners, and they're very focused on this. What they tell me, universally, I went out and did a big tour and met with 100 owners, big groups and so on. And almost universally, they're saying this data thing is going to be bigger. This AI and data thing is going to be bigger than the internet. And then they tell a story about, remember the internet? We were all sitting around. Is this real? Are people really going to buy cars online? This is just bad. And then look what happened. And they all have a sense that this is going to be more profound than the internet itself. And in some ways, there are indications that it will. Right? The machine efficiencies are what are necessary to, in an increasingly tough environment to stay profitable and compete. And the ones who, embrace that and get that right are going to pull away from the ones who don't. And they have a strong sense of that. The issue though is how. Like you can build a CDP, and then you can drown in data. The whole issue is then, what technologies do you use to actually activate that data and connect it, with your business problems or business objectives,
I had at my prior company, when I was a first-time CEO at Get a Car, I had an advisor, and they taught me something when I started hiring executives and whatnot. And they taught me, like, they called it breadcrumbs, right? You look at someone's experience, background. Well, just look for patterns, right? Look for slope, right? Look how this person has really grown, or what are they focused on? And I bring this up because you obviously are, the chairman CEO of Lotlinx. But I think what made me more interested here is that you've been in this position for 13 years, and you're not a dumb guy. And for you to still be in this position, it tells me that, without knowing you, right? We're just talking now. It tells me that you have a lot of conviction in what you're doing, or at least believe in the long-term upside, because you would have otherwise done something else a while ago. Right now, I'm hypothesizing here, but that's just how I see it. So the first takeaway for me is, it's clear that or at least it seems as though, based on what you're doing, and you've been doing for such a long time, that you really do believe that there's great upside here, or else you would have done something else a while ago, as any entrepreneur would have. The second question for you, though, is, what are the problems you're solving today at Lotlinx? Like, tell us a little bit about your company, right? Like, what are the problems you're solving today? And, what does that future look like? Go ahead.
Yeah, so I do have a lot of conviction. I think we're, I guess I'm a born optimist, but I think we're at the beginning of something rather than the end. And, if I thought we were even peaking, we've had a number of people try to buy our company, and we've said no. And, we're in a nice position. We don't have to, and that's only because we think the future is brighter. And as these trends play out, it's going to move, more and more in our direction. Right. And so we'll see if I'm right about it. I'll try to simplify it, like the dealers understand that they take in inventory, and essentially, if you're a dealer, your position in the whole food chain is to take inventory risk. You got to hire staff, you got to have a place, you got to do all this stuff, but really all you're doing is the OEM is pushing off, inventory risk to you, and you have to actually dispose of that risk in the marketplace. Right? That's the whole game. And so dealers understand, listen, if I take in the right stuff, I'm stocked right, and I have a good franchise, my franchise absorbs cars and I make good money on that. The issue is when that doesn't work. Like, hey, if you sell a car on time, you make good gross. And every dealer is going to sell a certain number of cars every month just because of their footprint, and they're pretty well organized things. The issue is, all right, when I don't have a match, okay, and I carry over inventory. So one of the key insights is, if you sell a new unit on time, which means to us within 45 days, dealers move on average in inventory in anywhere from 12 to 20 days is their average turn time on the stuff that they sell on time. And on used, it's 30 days, right? You got to move stuff in 30 days. All right. And that's, these dealers are doing really well with, used. I see most dealers are running about 10, 12 days on average turn for the stuff they're selling within 30. But as soon as you cross that 30-day mark, or the 45-day mark in the case of new, that goes up by 5x. You go up from selling on average, 12 days to 70 days. And your gross on new is about halved. So if you just break out your business, all right, I sold 100 units this month, but I sold 50 of them fresh within 45 days. I make great gross on those. Okay. And my average days to sell were, 12. But as soon as they started to age, I crossed that 45-day line. Now my average days to sell is 75 or 80 days. And my gross is really slim. Okay.
All right. Wait. I before you move on, I just want to simplify this for 1 second. So I live in Philly, and there's the Pennsylvania Turnpike here, and I used to drive to the auctions on Mondays, and there was this one exit on the auction that if you missed this exit, you were stuck on that turnpike for 45 minutes. So that, I don't know why my brain thought about that, but what I'm hearing from you is basically
you're brilliant. That's exactly it. Yes.
So what I'm hearing from you is that basically what you're saying, and to simplify, is like, if you don't get that car out and sold by that 30-day mark, you are like, that car is likely, is that average spikes, and that car is going to linger on your lot for 70 days. Your gross has just kind of gotten cut in half. It's pretty much like, you got to operate efficiently, but if you miss that boat, that average just shoots up way higher.
And so again, we have all the data, and so then what happens is dealers have a tendency, and again, I have the deepest respect. I will tell anybody, the most resilient, smartest, shrewdest business people I've ever come across, but they tend to buy stuff, hope for the best, and then about day 35, they're like, oh shit. Okay, so then when they carry over, right, that inventory, they have to mark it down. The problem is, first markdown doesn't do it. The markdowns, the average is almost 4. So you got, once you miss the exit, you're going 9 miles down to the next one, in traffic, right? And so then you got to park it down. And by the way, a car is always depreciating. So you're chasing the market, you're chasing a falling knife, we used to call it in the stock business. And it just sort of compounds. And so the whole game for a dealer is, hey, you're never going to be risk-free. You're going to get risk inventory. You're going to take stuff in trade. You're going to go to auction, make good decisions that turn bad on you. The game is to know which units are going to be a challenge day one. Not, okay, it's day 35 and I got to start trying to clear this inventory. And my only tool is markdowns, right? Another fact.
How do you do this, Len? How do you do this now?
Well, so what we use is machine learning and machine prediction. Like we have this massive data set, knows everything about all the things that are going on. They can basically look at cars and say, okay, these are the ones that are going to be in trouble. And then if you know that before they become trouble, you can make some really, really smart moves and keep really great growth. One of the issues that dealers have is that troubled cars tend to be overpriced too long, and then they have to cut them way too much too late. And so if you know that something is going to be a challenge, if you get it down to market, the sweet spot's about 98% of market, right away, you're going to harvest massively more gross on that car than if you keep it overpriced until day 35, and then you start adjusting down. And so what we've built is a bunch of tools that give dealers the ability to understand what's going to be a challenge and take early corrective action, and therefore hold a lot more gross and actually keep their turn, carry over less and keep their turn times on, their overall turn times, in a healthy position. And that's, that's kind of the key thing that we're working with dealers on, because we just show them their data. Okay, this is what's happening. You're selling these on time, you're making great gross. When they cross over, they don't. Here are the markdowns you've taken. If you had moved, earlier on that markdown, you would have ended up marking down a lot less, holding a lot more gross. And when they start to understand this, and they're given tools to actually manage it, if it's all manual, it's hard to keep up with. But machines can do this at scale. They get a much healthier business, right? I always say to a dealer, and I'll ask you, if you've got 100 F-150s new, and some of them are fresh and some of them are 120 days old, and the 120 days old you've marked down, aren't you marking them all down in essence?
Mm-hmm. 100%, because you're always going to go. To your point, you're going to go for the less expensive one. You have no choice.
So the compounded effect of this is, if you start nipping that carryover in the bud, you're marking down less, and your whole business goes up. We push up the growth on everything, not just the cars that are the problem, but everything sort of rises. And so there's this. We see it in every business. If you get it tuned right, it gets really profitable. If it starts to fall apart, you kind of get in this doom loop. It drags you down. And, right now, dealers are doing very well with used. I see, used, dealer day supply is actually coming down. We see very healthy used businesses, but we see a lot of unhealthy new car businesses. And that depends on the brand you're having. It certainly depends on the operator. And if you got a bad, a challenged brand and a challenged operator, it can be a really, really big problem. And so, new is because of, I think, affordability primarily is we're seeing a lot of carryover, and that's really dragging down the overall profitability of the store.
Yeah, it makes total sense. I mean, your cars are competing with each other. So what you're saying, I mean, in concept makes sense to me.
They're competing with the other cars in your lot. As a car guy, over half of people will come down dead set on one VIN and they drive off with something completely different.
All the time.
So it's not only just the other F-150s, it's all the other cross shopping, and everybody's got a different little orbit that they're willing to move into. Some of it's driven by payment, some of it's driven by use, but there's internal competition beyond just the other same make and models that you've got,
I want to ask you more about, you mentioned new cars are not being managed properly. But before we do that, just give me a sense of your scale, right? You've been around for quite some time. The company has grown a lot. How many dealers are you currently working with? Like, what's been the impact of your tool and your software throughout the industry?
Yeah, we're deep. Our sweet spot is dealer groups 10 to 50 rooftops. We do business with really big guys, a lot of business. Lithia, by the way, we wouldn't be in business if it weren't for Lithia. They figured us out early. And, so I think they used to be our biggest customer. Morgan, I think, is our biggest customer now.
Morgan, look at that. He's a friend of the pod.
Yeah, he is. I saw that, and very, 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 great operators and building a great, powerful, future-proof business. We have a lot of respect and I'm deeply humbled by their faith in us. So we tend to do well with those groups. So, in terms of direct dealer relationships, about 1,500 rooftops. We do a lot of business through the agencies and the OEMs in addition to that. So, the OEM business where OEMs use us to manage their inventory issues, right? Because they're not selling through Silverados in a certain region. The expensive thing for them to do is to drop incentives, right? So they tend to use Lotlinx before or in conjunction with incentives to clear these troubled bottlenecks of inventory. They got to clear them to sell more, and so we do a lot of that business too. So I would say that we have very high penetration of those, 5 to 50 power groups. The real competitive players.
This episode is brought to you by Witham, one of the largest dealership accounting firms in the country. Witham partners with dealers to help maximize revenue and cut costs, adding profit straight to the bottom line for dealers. And dealers, one of the easiest ways to add thousands to your bottom line is by working with Witham to submit for a warranty reimbursement rate adjustment. Witham has the insights and resources to quickly get parts and labor rate approvals across all manufacturers with zero disruptions to daily operations. Contact Witham today to get a free estimate on the potential profit you may be missing out on by visiting witham.com/warranty or clicking the link in the show notes below.
Tell me more about, you mentioned right now that there's this crisis in the car business where, or maybe you didn't say the word crisis, I did, so excuse me on that, but you mentioned that new cars are being mismanaged, which is obviously a bad thing. Can you dive deeper into what that really means?
What was working, a year ago isn't working now, right? There's more and more inventory. We went through this bubble of COVID, so let's just go before COVID, right? And really, I think at the root of the issue is affordability, right? New cars have, the average price of new cars has gone up. The average payment has gone up exponentially because of interest rates. So people are being pushed into used cars, and it's really challenging the new inventory. And so we see very high carryover rates in new cars. Now, we have a thing called VIN Census. You can go to our website and download it for free. We also have
we'll put in the show notes as well.
Yeah, there's some market demand stuff, and it's like a ticker tape. Go click around in that, and you can see exactly what's happening in your brand, your market, comparative trends and so on. We offer that all free to dealers. So, if some of the brands that are most challenged, obviously, Stellantis is got a lot of inventory, very, very challenged. Toyota not. They're probably Toyota is really crushing it. We see very healthy, Toyota new car dealers, and sort of everything else in between. But the trend is, swelling dealer day supply, deeper and deeper discounting, and a real negative impact on grosses, in new, and dealers, in order to deal with that, you can't just hang there and suffer the consequences. You've got to be able to bring net new demand into what you're holding.
So then, different question: do you think that OEMs are going to blur the lines with auto retail more and take more inventory risk? How do you feel about that?
Yeah, that's a loaded question. I think
that's what I'm here for, Len. That's what I'm here for.
I know. I think they would like to, but I think that there are significant, things in the way of doing that. Not, I said one time to Scott Painter, it was always sort of.
Yeah, he was on the pod. Yeah, he was on the pod.
Yeah, he was a brilliant guy. I said, who's the number one contributor to a state senator's campaign? And he looked at me, I said, a car dealer. Who's the number two contributor to a state senator's campaign? A car dealer. Don't try to screw with the car dealers locally. Okay. They, the states, kind of protect the franchises, right? You go down to Texas and try to mess with the dealers, you're going to run into the Texas Car Dealer Association. And it's a very well organized thing. So, I think the OEMs would, in the end, the OEMs just want to most efficiently move the inventory they can manufacture. And, they print out at one Silverado every 50 seconds all year long, except for August, right? So they just got to figure out how to most efficiently move that down through the channel. So, I don't think the dealers are, as long as the dealers are efficient in moving that inventory, there's no strong incentive for the OEM. And I think the OEM, we'll see. I mean, Tesla sort of broke that model. We'll see how well that does, how much of that is hype and how much of that is, I'm a huge fan, but I'm just saying, I don't know if you saw the McKinsey report, but 46% of EV owners are not buying. They're going back to gas. Why?
I don't know. I don't know how I feel about that. Like, it feels to me a little bit about like some like confirmation bias from someone at McKinsey or something, or like someone commissioned that. I'm open to hearing your perspective, but I personally, it's just like, I don't want to get political, but it's just like political polls that tell you someone's going to win versus the other, and I don't know. It's like,
I agree with that. There's a hype cycle, and at one time we were just seeing EVs are going to rule the world, and I didn't believe that, and then I read this, and it says, well, maybe not, and I don't believe that. I think it's like when I was raising money for Lotlinx. All the VCs thought the dealers were dead, and other people thought, well, online's not going to work. Yeah, it's kind of somewhere in the middle. Yeah. So,
Len, one of the things that I talk about a ton on this podcast is just the term of like stated versus revealed preferences. And the reason I talk about this a lot from consumers' perspective, basically like, I have a big audience, right? Relatively speaking. And so I ask my audience a lot of times for feedback on things or, opinions. But I always have to remind myself as well that your consumers don't always know what they want. And so, sometimes like you have to tell, like, with Uber, if you went to a consumer 15 years ago and 10 years ago, you said, hey, you're going to hop into a car with a stranger, they're going to take you somewhere, right? Like, I would have said absolutely not. Everyone would have said no. What are you talking about? Right? Like this random person's car. Well, look today, right? People send their, 14-year-old daughters in Ubers and stuff like that. So the point I'm trying to make is like a stated preferences from a consumer versus revealed preferences. It's really, really hard to predict the future. It's really hard. And even if you ask people what they want, most people don't know what they want until you show them what they want and they get used to it. So TBD. But
hey, when I was in advertising, all the great new products failed in focus groups because people hadn't seen it before. If you ask them,
point. Yes.
Yeah. And that's what Henry Ford said, right? If you ask people what do they want, they wanted a faster horse.
Yeah.
I mean, that's,
I love that. I love that line. All right. So before we wrap up, I do want to ask you about AI and inventory management. You mentioned AI. You're obviously very active in the space. What is inventory management going to look like, right? If we go to this like world where all inventory management, imagine it's like automated by AI. Like, will there be any, quote unquote alpha left for any dealers? Or is there going to be a race to the bottom on margin? Like, what's going to happen?
No, I think it's going to push up margin. I think, what I say is AI doesn't do anything that you wouldn't do if you had all the data and you could do it all day long. Okay. I mean, it does exactly the right thing and just enough. And so if you think about, you got a big dealer audience, they need to ask themselves, listen, are you marking down perfectly? I mean, at the right amount at the right time, And what they'll say is, yeah, I'm pretty damn good, but I also take a day off. I go on vacation. I forget about stuff, Well, that's the difference with machines. Machines can do things with precision that we can't. And there's huge, huge margin in the precision. And so what I like to believe, and I truly believe it, it's going to free up car dealers. It's going to make them more efficient. It's going to free them up to do to focus on things where they add the most value. I think sitting around, frankly, tinkering with price, maybe isn't the highest value, way that a dealer can spend his day on the lot, And I mean, you want to be able to guide it and you want to be able to oversee it and override it. But a lot of times a machine can make better decisions, and always relentlessly, without exception, at the right time where you can't. So I think this move is going to make dealers more profitable and more competitive and give them more time to be to do the stuff where car dealers can only do. I don't think it's going to turn into a machine driven, max headroom kind of future where it's all in, clippers.
Yeah. Look, pricing is always this like opaque, part of the business where there's so many different strategies. I've personally have adopted so many different as on the used side over the years. And, we went, obviously the old school way was initially just like, by days. Then we went, much more analytical. Then we split up the days. Then we went to, every day you price, right? Cars that hit your Tron. Like it's an always ever evolving type of thing. And I agree with you, but you also, humans, I mean, obviously it's not far from perfect. That's a huge pain point that would be, wonderfully solved by AI.
And the other thing that I'll try to impress upon you, think about if you've ever driven a bulldozer. I have. Yeah, 2 sticks.
I have not.
Okay. Well, you got 2 sticks. You got this big machine and 2 sticks, and one makes it go, one track go one way, right? If you only have price, you keep hitting it, you're just going to auger around in a circle. And that's literally what I find with dealers is price is most of the time not the problem. It's demand. And what they're doing is they keep dropping. Hey, I dropped price. Nobody looked at the car. You know how many cars? 70% of all cars, you drop price. Nobody looks at it. They drop price again. 70% of price drops. Nobody looks at the car. So what are you doing? So if you're priced right, what we found is, hey, you got to price right in the market. Then you got to push demand. You actually balance price and demand and do it at a scale a machine can do. There's massive margin to be had. And dealers haven't had the tools to be able to really balance those two things. They keep tinkering with price, seeing if that'll do it. As I say, once you start marking down, you're marking down 4 times. And several of those times you're marking down. Nobody's looking at the car. Yeah. So you miss the exit and it's just a grind, and the machine can actually balance those two things and net you far greater growth. Because I see dealers marking down too late and then too much. And what they need to do is mark down right, and then they need to fill in demand. And, that's essentially where I think the huge win is, around, machine decisioning.
So Len, what's next for you and Lotlinx?
We're introducing some new stuff at Labor Day that I think people will find really very sexy, almost like crack to the dealer. So I'll see if I'm right.
Let's go, baby.
And I think I'll show it to you first, right before I go. I'd be happy to show you. Tell me whether you think it's crack or not. But there's we're blessed with a massive amount of data that we can surface. And what we do, data is like what you were saying before. You can always find a study, lies analyzes statistics that confirms your bias. But what we try to do is actually take data and connect it to exactly what you're holding. How does this actually impact your inventory and your exit on this inventory? And so that's really where we live. The more you can help a dealer understand where he needs to focus his attention and maybe move earlier than later, the better off you can make his business. And that's kind of really what our future is giving them, you got to put it in dealer talk, right? You got to keep it very simple. You can ground in data. I made a mistake. I had a bunch of stuff. So I built these really fancy tools that would be great for, a hedge fund stock trader, but not so much for your average dealer, So the whole game has been to boil it down into the simple things that, they can act on, so we're very focused on that piece of our business. And it seems to, the great thing about a car dealer is if you show them their next move, they are all over it. If you make it simple and you kind of show them what they got to move on, they will move. And so that's our job, is to kind of deliver them into those decisions,
Yeah, the industry is a pretty funny case study when you think about it. Like, there's no other industry, as far as I can think of, where the majority of the operators are like entrepreneurs and it's so fragmented. Maybe, by the way, maybe motels, that actually might be the one, right? Motels, extremely fragmented. It's all entrepreneurs, but it's kind of funny to think about that. Yeah, you're right. Like it's a super entrepreneurial industry, and which is a reason I would say why it's so resilient, because it's entrepreneurs and you're always finding a new solution. So,
hey, listen, I listened to a story of the guys on your podcast. I was listening to the Brian Benstock thing, him telling his story, right? Here is, legendary guy, relentless, smart as a whip, came up and found an opportunity in automotive. He could have gone to the top in any business, right? But this was his path. And you have a lot of people like that who could have been, rock stars in any business they chose, but, automotive attracted them. They found a way in. And, so you've got a lot of that savvy, in this business. And, it's a tough business. So you got to be tough and smart to make it, right? That's the one thing we all know about. I mean, the car business was pretty good the past couple of years, but, what the owners tell me is my guys are coming to me like, when's it going back to normal? And they say, like, I smile because I think it's going back to normal. You've just never seen normal. Okay. The normal car business is brutal, competitive, tight margin, relentless, and that's what all these guys came up in. And so it takes a certain, strength of character and savviness to succeed in that. And I think that's why you get this. It's like being a Marine, man. You make it through basic training, you got something, I think that's why, we're drawn to the car business, because it's full of people like that. I love dealers, man. I spend my time. Something I would rather do. I mean, I like owners more than GMs. The owners are the guys who, they started with nothing and they've been through the thick and thin, and now they're sitting pretty, but they did not.
Give some love to the GMs, though. I mean, I know
there's a lot of great general managers out there, but I'm just saying the owners were GMs. They came up, they've been bankrupt twice, but now they're, I had an owner, I was having lunch with, he owns 25 stores, and he was not bragging, but he was telling me what he made last year, only to make the point, like, I don't need to work, but I'm in the office. I'm in the store at 6 a.m. every morning, man. I can't stop.
Len Short, man, this was an awesome conversation. I'm super excited to air this one. So thanks for coming on. Had a blast.
All right. I appreciate it. Listen, I truly love what you're doing. And, and we have a Chinese wall. I don't know anything about what you're doing other than what I see publicly, because, I know we have a mutual acquaintance, which, I haven't talked, I do know he's happy working for you. So he's very excited. He thinks you guys are on the ball here. So anyway.
My man, I'll definitely have to share more with you. So I do try to publicize, a lot of what we're doing. That's a big part of the brand, that transparency, but I'll definitely share more. So, all right, Len, thanks for coming on. This episode is brought to you by my very own Car Dealership Guy News. CDG News is here to help you stay updated on all things automotive. We're not your typical news crew. We're bringing you concise, unbiased car industry news in easy to digest formats. From the hottest headlines to podcast summaries, dealership best practices, and industry insights, we've got it all covered. And guess what? It's all free, no paywalls, just like we always promise. Hop over to cdg.news, that's cdg.news, and check us out. We're all yours for your feedback. Tell us what you need. Give us your honest thoughts. We're here to deliver real value. So don't wait. Head to cdg.news now or click the link in the show notes below.
All right. Hope you enjoyed that episode. Please give the podcast a rating, consider subscribing to the show, and check the show notes for links to what we talked about. Thanks for tuning in. I'll see you guys next time.